Let's now quickly revise Accounting Standard 24, which talks about discontinuing operations. Whenever we talk about discontinuing operations, it can be a line of business or it can be a geographical location. When I'm operating from more than one location, let's say I have 4 branches, I can shut down one branch. That can become a discontinuing operation. Or let's say I'm manufacturing 3 products or I'm giving 3 different services. If I stop to produce one product, or if I'm stopping to give one service, that can become discontinuing operation. Like how we discussed in Accounting Standard 17, business segment and geographical segment. A discontinuing operation can be a business segment or can be a geographical segment. It need not be a reportable segment. A non-reportable segment can also be discontinued. If you are still not understanding what do we mean by geographical segment and business segment, you have to revise Accounting Standard 17. Next, once we talk about this line of business, this should have been distinguished based on operational or financial reporting purpose. So this operation, what we are talking as our geographical segment or our business segment, this can be distinguished for the purpose of operation, meaning assets, liabilities, expenses, incomes, profit from this segment we should be able to determine separately. If we cannot determine asset, liability, expense for the purpose of operation or for the purpose of profit, financial purpose, I am not able to segregate that operation separately, then this discontinuing operation is not applicable. So to apply AS 24, that segment whatever is there, that should be able to be distinguished. We need to identify assets for that segment, liabilities for that segment, expense, income, profit for that segment separately. And if you have a plan, what is very, very important? Have a plan. And this plan should be to discontinue this operation. This is not applicable to the operations which are already discontinued. This is applicable to the operations which are planning to discontinue. That plan can be to discontinue the operations in a single transaction, like you're selling the business immediately in single transaction, or it can be in a gradual phased out manner, or it can be through abandonment. How many things are there? 3. One, immediately you're selling everything. Second one, in a phased gradual manner you're selling. Third one is abandonment. When you're selling it entire thing in one single transaction, that single transaction can be sell it to somebody else, or it can be demerger. Demerger means your company has 5 product lines, or a company has 5 branches. Let's assume product lines, business segment. You are segregating one segment or one product line into a separate company. Like how Reliance Industries, demerged Geo Financial Services into a separate company. You can do demerger. That is 2 companies coming together is merger. One company becoming 2 companies is demerger. Or by way of spin-off, selling that entire wing with the business to somebody else. This is a single transaction where you are discontinuing that operations. Second one is by way of disposing in piecemeal. Piecemeal means what? Not the entire thing is disposed once. You sell some assets, you settle some liabilities this year. Next year, you again sell some assets, you again settle some liabilities. The year after that, again you sell some assets, again you settle some liabilities. In a time-based manner, you have a plan to dispose all the assets and liabilities little every year. That is disposing in piecemeal. Last one is abandonment, termination through abandonment. You will not sell anything, maybe because there is no assets to sell. You will not settle any liabilities, maybe because there is no liabilities for that segment. What will you do? Abandon. Ange bitbudadashte. We will not do any sales we will not do any sales. We will not incur any expenditure. We will not get any income. There is no assets to sell. There is no liabilities to settle. Immediately you stop that. That is also abandonment. So discontinuation can be of a major line of business or a geographical area which can be distinguished based on the operation or for the purpose of financial reporting, and it can be through single transaction or it can be through piecemeal or it can be through abandonment, and this has to be a time based plan. So whenever this is based on a plan and they decide this, they need to disclose this. How do they disclose? In your profit and loss statement, you write no revenue from operation, other income, total income, employee benefit expenses, depreciation, or to say finance cost, other expenses, total expenses, income minus expense, profit. This profit has to be written separately. How much is the profit from continuing operations? How much is the profit from discontinuing operation? Basically, you will prepare P&L account 2 times. In that P&L, first time you will write all the operations which are continuing, which are there this year, which will be there next year, which will be there in the next to next year also. That you will write one PL. Operations which are there this year will be not there next year. Write them separately. Call them what? discontinuing operations. Even when you compute EPS from continuing operations, EPS on the profits from discontinuing operations will be computed separately. You do this kind of disclosure. When should you make this initial disclosure? This initial disclosure event is one of these. Whenever the board passes one resolution to do this discontinuing operations, or whenever they sign one binding agreement with some party who is interested to buy our segment, whenever the board passes one approval, or whenever they sign one binding agreement, whichever is earlier will become the initial disclosure event. After that, whenever they prepare their financial statement, they would have to disclose. If it is a non-listed entity, at the end of the year. If it is a listed entity, stock exchange, they would have to give quarterly reports. No, in that quarterly report only, they would have to make this separate disclosure for discontinuing operations. Understood? What is the disclosures that we should make? Assets relating to discontinuing operations, liabilities relating to discontinuing operations, revenue and expenses relating to discontinuing operations, profit or loss from discontinuing operations. All of this has to be disclosed separately. What else we need to know is, whenever we have more than one product line, let's say we have five of them, and one of them is discontinued, this does not result in going concern being questioned. This does not make the organization not a going concern. Should always assume that though one or two or three operations are discontinued, organization is still a going concern unless otherwise mentioned, unless otherwise other indicators are triggered. Then, if the demand falls, if the supply decreases, if the technology has changed, or if the profit is more in other department or other segment, you temporarily shift your employees, you open one more office for that department, or when you shift your capital to this, whenever you do all of these things, it is not resulting in discontinuing operation. For it to become discontinuing operation, you should have a plan, time based plan, either immediately or in gradual phased out manner to shut down the operations. When you don't have a plan, for operational convenience, if you reduce the operations, for operational convenience, if you shift the force, resources, employees, money from one to another, that will not result in discontinuing operation. Understood?